Welcome back to Dukascopy TV, and it's pretty much the end of the trading week, so I've got for you another Targets and Focus interview to help you plan your trades for the coming weeks. If you're not a trader, however, maybe an economist, strategist, professor, or maybe you're just watching out of interest, either way, my guest today I'm sure has some interesting views on the euro dollar, the pound dollar and the euro yen. These are the currency pairs we're looking at in more detail today. So let's go straight to the phone where Peter Frank, a well-established FX strategist at BBVA, joins me now. Peter, I'd like to start with your predictions for the cable. Some analysts are pointing to a renewed weakness for the pound in the coming 3 to 6 months after previously performing quite strongly off the back of a poor performance from the US dollar. Do you agree with this view?
We've got roughly around 163.75 for 1 month, so it's a rally of about a point and a half from where we are right now in the current spot rate. The 3 month rate is around the same, around 162.50, something close to that. So we're looking for a slight pullback on 3 months, most of that driven by some net selling of euro, which will drag down cable a little bit, because euro sterling, even though we do think it's going to nudge a little bit lower, it doesn't move as quickly. So we do think if the euro weakens a little bit, when the euphoria that's still around in the markets about the improvements in the Spanish bailout, the OMT announcement, the fact that we think the ESM will be reasonably successful in its first month or two. Once that euphoria turns around, we think euro dollar will fall back lower, and we are looking for euro dollar to hit 125. We think that will bring down how far cable can actually rally, even though we are expecting good news on the UK side. So we've got a slight reduction in where we think cable's going to be on the 3 month view, but on a 1 month we think it's probably 1, 2, possibly 3 points higher in general. Now, why are we bullish on cable? We do think that just as cable will fall a little bit if euro dollar comes off, we are reasonably bullish that euro dollar is going to be back into the low 130s in the next few weeks. Now, for sterling, we think sterling is going to pretty much track the moves in the euro. So when there's good news in the eurozone, we do think cable will, in general, move higher. Why do we think that? Well, the main view is that we're reasonably optimistic about what's going to happen in the UK economy in Q4. We are certainly of the view that the worst performance in the economy was probably the first half of 2012 for the UK. We do look for a bounce in Q3 being repeated again in Q4. So whilst the UK in the GDP statistics currently in a technical recession, we think that there will be a reasonable bounce for the second half of the year statistics. And this is definitely coming through on a number of key anecdotes. The labour market strength is very much pronounced in the UK. We've seen decent employment growth, both private sector as well as service sector has been driving it. The broader private sector has been overwhelming the net negatives from the austerity measures, which have reduced public sector employment. Also, we think that the PMIs are good indicators of overall activity in both service and manufacturing, and both of those are holding up quite well. We also think that the housing market is beginning to recover somewhat and will respond to the easing policies from the repo, the lending facilities created by the Bank of England, the extra QE, and possibly even a rate cut, which could be announced in the next 3 to 6 months from the Bank of England, although that for us is still something that's not our central case scenario. So in general, we think that the UK economy is going to be strong enough to support a higher cable in the short term, and not much of a pullback, even if we do get a stumble in euro dollar, perhaps on 6 weeks to 2 month horizon, when some of the euphoria from the eurozone support measures starts to wear off.
Okay, so let's move on to the euro dollar then. The euro strength today against the dollar in light of yesterday's Spanish budget for 2013, which could lead the way to a new bailout. What are your predictions for this major pair?
We've got 1 month up around 131 by the end of next month. We do think it will move higher than that before then. Probably the most positive levels will be seen in the next 2 to 3 weeks. And this, we think, will follow some kind of agreement with Greece and some positive news flow from the political environment and the elections in Spain. We think that the data will not offer a great deal of support to the euro, but it's going to continue to show a fairly sharp split between the recessionary peripherals and the reasonably solid growth scenarios in Northern Europe. And we think that in general, data is going to be pretty neutral for Europe, but the political news and the concerns about the collapse of the euro, convertibility risk, the end of the euro, etc., all these are fading quite quickly. We think as they fade further in the next month, then the net shorts that are still lingering in the spec community will wash away, and this will support a reasonable rally in Eurodollar. We're not looking for an aggressive rally as we saw 4-6 weeks ago, but back up to the low 130s and kind of staying there for the short term.
Finally, the euro-yen. Are we starting to see some decent support in this pair? What are your thoughts looking ahead?
Yeah, I think we are seeing support. I mean, the euro-yen has been trading around the 100 level, not just in recent days, but in the past few weeks. It's got a lot of support around 100. Now, the reason I think we've got a forecast here that's going to nudge a bit higher. We're looking at euro-yen heading to above 105 in a month, and even higher, say, for 12 months, 9 to 12 months, we're looking at it moving between 110 and 130, with 130 possibly being reached within 2 years as a sort of aggregate average. The reason we think that, well, the main support is we are bullish on Eurodollar surviving, and we do think that Eurodollar is somewhat undervalued at current rate, around 129, 130. It's very much an undervaluation, whereas we think the yen is very much overvalued. And that can be seen from the external account. So if you're looking at a longer term forecast, Euro-yen should be correcting higher. We've got near record current account trade balance surpluses in the Eurozone, whereas Japan's lost its long-term trade surpluses that it enjoyed when dollar yen and euro yen were at much higher levels. So we do think there is a natural correction to the spot rate in favour of euro upside. So that's why we've got our forecast. So just to repeat on the forecast, euro yen we've got 105 in 1 month. We've got 3 months falling to around 102 to 103, but then bouncing higher fairly quickly once Eurodollar begins to move a bit higher again. So we've got 9-12 months up around 110, 112.50, 113 levels. So we're reasonably bullish that there's good upside potential in the short term and the medium to long term for Euro-Yen.
Okay, thanks for that, Peter. That's all for now, I'm afraid, here on Dukascopy TV. Thanks for joining me, and I'll see you again next week. Goodbye.